Gikas Hardouvelis, the chairman of the National Bank of Greece, and I'm going to chair this session. It's going to be very quick, so please pay attention. Today we have with us two very important policymakers from the Eurosystem. Mr. Luis de Guindos is the vice president of the ECB, he's right next to me, and Mr. Constantinos Herodotou, the governor of the Central Bank of Cyprus. You know that we live in very interesting times when, with inflation still running very high, a war in Europe that hasn't stopped, and financial system cracks appearing, especially in the US and in Switzerland. The ECB must take important decisions soon. First, how much should it further increase interest rates? Second, how quickly? And third, how long should it keep interest rates high without risking a recession and financial instability? Does the ECB have the tools to deliver price stability and financial stability and avoid a recession at the same time? Citizens demand even a lot more. They don't understand the constraints of the ECB. They want a healthy banking system, they want low inflation, and they want to see expansion and their wages rising even above inflation. So the demands are high. So today I'm going to ask a few questions to our panelists, and hopefully we will get a sense of where ECB is going. And I'm going to start with Vice President de Guindos. Mr. Vice President, do you see the inflation dynamics and the growth outlook, how do you see the inflation dynamics and the growth outlook in 2023? How is this affecting ECB monetary policy decisions over the next week, perhaps, and the next few months? Can you tell us, hopefully very briefly, in less than 4 minutes?
Well, first of all, good afternoon to everyone. And let me start saying that it's a pleasure to be here with you, with my colleague and good friend Constantinos, a very important contribution to the Governing Council of the ECB, and with you, Gikas. You bring me, all memories.
Memories, yes.
Of different times. Well, you asked me about the outlook, and I would start indicating and stressing that we have good news. The first one is that we have not fallen, the euro area has not fallen into a technical recession. Growth in the first quarter of the year, according to the leading indicators, is going to be positive. So this is good news, because only in December last year, our baseline was that we could have a technical recession. This is not going to take place. The second part of the good news, or the second good news, is going to be, the evolution of the labor market. The performance of the labor market in the euro area is very positive. It's quite impressive. We are in an all-time low in terms of the unemployment rate. And even we have recovered, the level of employment, both in terms of employees and in terms of hours worked that we have pre-corona at the end of 2019. And the third piece of good news is that inflation is declining. We have seen that inflation has come down from a peak that was in October to the situation, to the headline inflation that we have now, that is a little bit above 6%. And I can say that headline inflation will continue declining over the next months. What is, the not so good news? Let's go to the other part of the story. And the other part of the story is, first, that core inflation is quite steady, and that is sticky, much more stickier than headline inflation, and simultaneously that we have received some financial tensions coming from overseas. So that's the combination of our view now of the outlook. What I can say is that simultaneously we have to pay attention to the evolution of the financing conditions in the euro area. In our bank lending survey that was published, and it was focused on the last quarter last year, it was quite clear that there was a tightening of financing conditions, and that the demand for credit in the euro area was clearly declining. And I think that this is something that we have to take into consideration. So, all in all, and I think that I have not consumed even 4 minutes, I hope that I give you some highlights with respect to the outlook.
Thank you. Only 3 minutes. And good balance between good and bad news. Usually the ECB always looks at data. Governor Herodotou, what do you see as major challenges for monetary policy makers in the euro area? We start with a general question.
Thank you for the question. Good afternoon from me as well. If I'm going to talk about challenges, then I won't have much good news to give the same balance as Vice President Guindos. But let me try to list the challenges that I see and we discuss also at the Governing Council. And one of the major characteristics of these challenges is that they may act in opposite ways as regards inflation dynamics. So one challenge that we need to keep an eye on is wage growth. You mentioned it at the introduction. Of course, that has an impact on consumption, on demand, and the thing that at the ECB we have said many times, it's important to avoid a wage price spiral. There have been wage increases in 2022. Based on the ECB wage tracker, those were at around 4.7% in terms of the countries it follows. It's expected to be higher in 2023. So this is one area we need to keep an eye on. And obviously, this has an inflationary dynamic. Another area is the globalization or trade fragmentation. And because of the geopolitics, if we bring also onshoring, that's also another element that has the challenge and the risk of adding to inflationary pressures. China reopening, it has potentially a dynamic in both directions. On the one hand, this resolves and smooths out supply chain issues, given that the Chinese economy, the factories and the ports are functioning more smoothly. On the other hand, there might be Chinese consumption and demand that may have an inflationary impact. And then another area that both of you have touched upon is financial markets and the tensions that we see. These come as a spillover from the US, but it has created tensions in the financial markets in Europe. And this may have an additional impact on financing conditions in addition to our monetary policy. So we need to gauge that and see how it could potentially complement or at least how it contributes to the monetary policy stance.
I'll come to some of these points you raised, and I'll go now to the Vice President. Mr. Vice President, I guess one item Mr. Herodotou did not mention is fiscal policy. And we know in the last few years, fiscal policy and monetary policy were well synchronized. Do you see a risk there, a decoupling, problems for the ECB because of expansionary fiscal policy, especially during a war situation? And can you say something more about the issue of wage indexation? Because, I mean, I was trained in the 1970s, and I was the issue, wage indexation, when it comes to inflation. What does the ECB think about all this?
Well, these are two very important topics, as you have indicated. First of all, with respect to fiscal policy. Fiscal policy, has been a very important element during the times of the pandemic. It has been, quite instrumental. It was a little bit a whatever it takes fiscal policy approach during the pandemic. Even we have been, I think that with 4 years without any sort of fiscal rules. The escape clause was activated in 2020, and it's going to be deactivated in 2024. And something similar happened with the excessive deficit procedures. So in that respect, I think that fiscal policy played a very important role. But, we are not in the pandemic anymore. We are in a different situation. We have in a context of very high inflation, and fiscal policy has to play a role. The role that it has to play has to be much more selective, much more tailor-made, much more temporary than in the times of the pandemic. I think that in 2021, in 2022, fiscal policy should be totally focused on helping the vulnerable groups of the society because of the energy shock. But now energy prices are declining, and that's good news. And so fiscal policy should start to revert, the support measures that were introduced in 21 and 22. And simultaneously, I think that it's very relevant to avoid any sort of conflict between fiscal and monetary policies. Why? Because, we have, a very concrete example, that it was the case of the mini budget of the UK. The mini budget was considered and regarded by markets are, incompatible with the monetary policy stance. And so immediately, the reaction of the market was an increase in yields, and this increase in yields affected financial stability, and the Bank of England had to intervene. So I think that this is an episode that we have to bear in mind in order to try to define the way that fiscal policy has to be pursued in the near future. With respect to the second question, wage indexation, it's very important to avoid a wage price spiral, as Constantinos has indicated. What we have seen is that over the last 3 years, the evolution of unit labor costs and the evolution of profit margins has been quite similar in the euro area. I refer to the euro area. But in 2022, what we have seen is that margin profits grew faster than unit labor costs. I think that it has to do with some composition effects, because not all the sectors behave identically in terms of profit margins. But what I believe that is going to happen in 23 is that because of the slowdown of the economy in 23, profit margins will not continue growing at the rate that grew in 2022. Whereas in the case of wages, we have seen an acceleration of wage growth. So according to our projections, wages are going to grow above 5% in 2023. And this is, one of the elements that we have to keep an eye, as Constantinos has indicated. Because at the end of the day, what we have to acknowledge is that because of the energy shock, the euro area economy is becoming poorer. We have a deterioration of the terms of trade. We are transferring to overseas, a larger part of our income. And so I think that any sort of, let's say, conflict between wages, profits, and the public sector would be extremely detrimental to the future, and it could produce a reaction of the ECB in terms of our monetary policy.
Okay. Thank you. Let me switch a little bit from the factors that you're worried about inflation, and ask Governor Herodotou. Since July, what we have observed is an interest rate hike that was very quick and very big. Yet, we haven't seen an effect on the economy. What do you think of this? Is the effect of monetary policy absent?
Of course, you're right. In the space of 9 months, I think we hiked by 350 basis points. But in terms of that speed, I think it's important to acknowledge the starting point. We were at minus 50 basis points, which was a very, very accommodative stance. And we had a lot of distance to cover in order to enter the neutral range of interest rates, and then, of course, end up afterwards in the tightening range. So going from very accommodative to at least the neutral is something that was definitely validated at the time. Now, from a monetary policy perspective, the decisions taken on the interest rates until we see an impact into the real economy, it takes about 16 or 18 months. So we started raising interest rates in July last year. So we are beginning now to see the first signs of the impact in the real economy. And as the Vice President mentioned before, it's already seen in the headline inflation, even though core inflation is sticky, so we still have to work on that. Another thing to note is the heterogeneity of the Eurozone countries. So there is a heterogeneity in the economies as well as in the inflation rates. So in terms of the transmission mechanism and how it impacts each Eurozone economy, there's going to be a difference also in the speed of it. But at the end of the day, we are at the tightening territory. And already from a projections perspective, we're already seeing the headline inflation decreasing this year. And we will tackle core inflation as well.
Okay. I guess Milton Friedman was right after all, you know. Anyway, let me change now a little bit of discussion and come to the financial sector and the banking sector, something actually that I'm a bit more familiar. And we know during the last 2 months, there is a lot of uncertainty all over the world, the Western world, following the failure of US banks. Recently, we had another bank failing, and then Credit Suisse in Europe. I mean, the ECB came out and said, we're doing things differently than the Swiss are doing, and trying to differentiate itself. I want to ask the Vice President, and then I'll come to you, Mr. Herodotou, on the same issues. Are you worried about this uncertainty? Because to me, as an outsider, it reminds me of 2008. There was a brewing storm. Everybody was worried. Spreads had risen. And people were accustomed to it. They felt, OK, we're going to live like this for good. And they did not understand the shadow banking system, what was going on. So do you think bank liquidity problems in the euro area may resurface? One question. And the second, which is touching to my earlier discussion, there is a huge non-banking sector even in the euro area. And this is lightly regulated, and it's outside the sphere of the ECB, I understand. But are you worried about it? Are you watching it? Are you trying to push? Can you tell us something on this that perhaps can calm the Europeans?
Well, let me start stressing that, you know, in our financial stability analysis, always the non-banks, the old shadow banking, you know, is the main source of, let's say, preoccupations in terms of financial stability. So that's quite clear. Why? Well, you have indicated that, you know, the supervision is not comparable to the supervision of the banks. Simultaneously, non-banks, they have taken a lot of risks, duration, credit, liquidity, leverage risks, and this is something that is quite obvious. So is now is the main source of preoccupations that we have in the euro area. The euro economy is much more bank-oriented than market-oriented. The US economy is the other way around. But as you have indicated, mutual funds, they have gained a lot of market share in the financial system in Europe. So I think that you know, is something that we have to put a lot of attention to, and simultaneously to take into consideration, for instance, that they have a lot of exposure to the commercial real estate sector in Europe. And this is something that we have indicated in a recent research paper that we have produced, and you know perfectly that the evolution of prices in the commercial real estate is declining clearly. There, I think that we have some, let's say, you know, spots of preoccupation with respect to the recent evolution in the financial system. Going to the banks, well, the situation that the European banks are resilient. They are in a much better position than they were 10, 15 years ago. That's a reality. If you look at and you compare capital ratios, liquidity ratios, the quality of the liquidity assets, well, it's a totally different world in comparison with the situation that we had 10, 15 years ago. And simultaneously, the increase in interest rates is positive for the European banks. Why? because the net interim margins are going to widen, and they are going to compensate the potential losses that the increase in yields might produce in the fixed income portfolios. So in that respect, for the whole system, at the system level, overall, I think that we can be reassured. Nevertheless, we cannot be complacent. In life, we can never be complacent. I think that we have to take into consideration that the economy is going to slow down, that we can have spillover effects, as you have indicated, from overseas, and this is something that these tensions are going to take place, and the connection between the non-banks and the banks is something that we are looking at very, 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 very carefully. And finally, let me say that in the case of the U.S. banks and Credit Suisse, they are very concrete, very particular, very idiosyncratic cases. That I think that overall, in the case of Europe, they are not going to be, the situation is not similar at all. In the case of the regional banks, there was a clear, in the case of Silicon Valley Bank, there was a clear mismatch in terms of, interest rate sensitivity, and, they have, an open position that, at the end of the day, with the increase in interest rates, gave rise to the problems, and they couldn't complete a capital right issue. So, in that respect, I think that it was very, very, very particular. And with respect to Credit Suisse, well, we know perfectly the problems in terms of corporate governance, in terms of risk control difficulties that Credit Suisse had in the time. So the problems of Credit Suisse didn't start the week before, the intervention and the takeover by UBS.
Thank you. I guess from a banker's perspective, we complain that you micromanage us too much. Now, in case of crisis, this is good. So now we're happy. We applaud. In good times, we usually nag. Anyway, I'll go to Mr. Herodotou and ask in the same domain, what do you see as the main takeaway from the recent crisis of confidence we saw in the last 2 months? That's one question, if you think there is a crisis of confidence. And then another item that at least the banks are worried about is, will there be an additional tier 1 equity market, a bond market that can count as capital because of what the Swiss did? They changed the priority in banking. So what do you think? You have a view on these things?
Starting with your first question, I wouldn't call it, at least in Europe, a confidence crisis, but what was happening in Europe, there was already volatility in the markets. When the event in the US happened, given the volatility in the markets, that created a contagion that was also unexpected in the sense that SVB was a regional bank, was never seen as a systemic US bank that could have any spillover effects. But the memory of the previous great financial crisis triggered tensions in the financial markets over here. In terms of, though, and building on what the Vice President said, in terms of the contrast, since 2014, we've had the SSM, we've had common regulation in banking. The liquidity composition of European banks is quite different. It's much more stable in the sense that a big proportion of it is based on domestic deposits. That makes it much more stable. And that's easier to manage. And also the stress testing of the SSM is quite intricate and envelopes a lot more banks in Europe compared to the US. And that should give us confidence. But as the Vice President said, and I fully agree, we should not be complacent. Because if there is volatility in the markets, you never know what kind of a reaction there might be. But as we said before, in discussing financial stability, there are all sorts of instruments that can be used in such cases. Coming on to your question on AT1, the ECB was very clear. It issued a statement straight after the Credit Suisse incident confirming the order of seniority in Europe, which comes out of BRRD. And just to be clear, I mean, the common equity instruments are the first one to take the loss, and then we move to the other instruments. That is confirmed. I think it may be too soon to see what the markets think about it. We need to see some transactions coming to the market and how those develop from the banks, that is. In terms of other regions, I know that in Japan, I think Sumitomo Mitsui issued an AT1 very recently.
So and the market is coming back. So the market is coming back.
Okay. It's coming back, and if we compare Sumitomo's issuance that was very recent to another issuance they made end of last year, which is pre-Credit Suisse, there was only around 30 basis points increase. Now, of course, that's outside Europe, but bondholders in Japan had losses from Credit Suisse. So let me just confirm the European position, the ECB position, that seniority is observed in Europe.
Thank you. One final comment, perhaps, question. To me, I'll tell you, I like the fact that we had some inflation because as Greeks, we have a huge debt, and the debt to GDP ratio just declined. We just don't want inflation to stay for a long time. So there was a positive thing from inflation when it comes to from your perspective, do you have something good? Or is there something else that worries you? For example, the trade-off between monetary policy and financial stability that I mentioned. Just your last remark, either something good or something that's keeping you up at night.
Well, I think that now, to finalize my intervention, I think that there are two issues that I would like to stress. The first one is, and it's related to what Constantinos has mentioned before, is how rapidly a deposit run can take place in the modern world. It's something that is totally new. Yes. Now, we live in a Silicon digital Valley world with several clicks. You can move your deposits. You do not need to go to the branch of the bank in order to withdraw your deposit.
We're discussing it in our board. This is
so an issue. It's a very important issue, and in combination with social networks.
Yes.
That's something that is, is a new way of spreading, news in the modern world. Let's call it that way. So that's something that I think that we have to pay attention, and regulators will pay a lot of attention in the future. Because I fully agree with Constantinos that there is something that is quite clear. The deposit base of the European banks is not comparable to the regional American banks. And the second point about inflation is a tax on mainly the vulnerable groups of the society. Yes. Why? Because they have, a very high consumption propensity. They consume a much bigger part of their income. And second, because the kind of items that they consume are the ones that they have raised much more in terms of prices. So taxation, inflation taxation is something that we have to take into consideration.
Thank you. Mr. Herodotou, one last, something about Cyprus that worries you? Let's get some news from you.
I think we cannot be complacent, but at least as regards the Cyprus banking sector, we have one of the highest liquidities in the European Union. We are at roughly slightly over 300%. The regulatory minimum is 100%. So I'm not concerned about our banks. So I'm concerned that the central bank, because of that liquidity, will have issues in terms of not being profitable, but at least we're happy that the banking sector is quite well-founded right now.
Well, Mr. Vice President, Mr. Governor, thank you very much. Please applaud them. Thank you very much.
So, Gikas, very good to see you again.
It was nice, yeah.